Here at Longin's Capital, we've spent over a decade building a strong track record with our full suite of services and high performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more. Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundin's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hi, Peter. How are you this week?
I'm doing good. Of course, the market movements leads to more conversations with the investors about the portfolios, investment portfolios. That's natural. And then we're actually spending a lot of time on our defense fund this week.
Oh.
Let's see if it leads to any interesting announcements. We don't know yet, but we try to work hard in that direction. Maybe there's something for next week. Who knows? Mel, how are you doing?
Yes, Peter. So actually, a lot of um, political and economic developments going on at once here
Mm.
in the Philippines.
Uh,
Actually, most of Asia. So a lot to keep tabs on this week, and some of it we'll actually discuss. For the Philippines, it's actually quite a development recently. So some trouble within the government. So we're keeping tabs
yes.
on that as well. But yeah,
Mm.
otherwise very exciting landscape so far. Speaking of today's episode, that's our 60th episode, Peter. So great
Oh.
job for both of us. And we have a few topics in store. First, we'll look at Japan, some tough times in terms of economic and diplomacy concerns. We'll look at that in a bit. Meanwhile, China, particularly the Chinese stock market, is
Mm.
getting so much more attention recently, and we'll look closer into that. We're also looking at Indonesia's plans to impose excise taxes on gold. So, kind of similar with their previous nickel policy, but taken
Mm.
differently. And then, of course, we'll try to look into some escalating concerns about market bubbles, especially for this year. It's really about AI, and we'll dissect that in a bit. Maybe check on whether these fears are overblown. And as usual, we'll end with our global outlook, Peter.
Yeah.
So, Peter, I'll jump into the Japan discussion. Some tough times for the Japanese economy. They just came out with third quarter GDP figures, and it was at negative 1.8%, so a contraction, which
Mm.
apparently was a bit better than what the markets expected. But still, of course, it's a shrinking economy that they have.
Mm.
The bigger concern there is, of course, the decline in exports, particularly for cars, and that's mainly due to the tariff scenario with the US. At some point, of course, the July to September period saw tariffs at a high of 25% for Japanese goods. It's now down to 15%, so there might be some reprieve there. But the bigger story as well is a decline in domestic demand, particularly for residential investments, down 32% year on year. So quite alarming. We actually came out with an article a few weeks back discussing Japan's aging households and aging homes. So that might be an explanation as to why investments are down as far as the private market is concerned.
Mm.
And yeah, I think what we can see here is, or this scenario rather, gives credence to the subsidy plan of the new prime minister. She wants to perk up private demand by offering household subsidies as well as incentives to businesses so that they can invest again. And of course, tourism is also a bright spot. I know for a fact that Japan remains to be a favorite travel destination by a lot of people, even from countries where visas are required. We still
Mm.
do like to go to Japan, but even that could be in peril because very recently, Japanese Prime Minister Takaichi ruffled some feathers in Beijing when she commented about Japan's supposedly hypothetical response to China's attack on Taiwan. And of
Mm.
course, it is a very sensitive topic. And now the Chinese government responded by calling for a travel boycott and even educational boycott for foreign students traveling to Japan
Yeah.
as a retaliation to the controversial comments. But actually, as far as an outsider is concerned, that's really how Japan's foreign policy goes. Of course, they're allies with the US and therefore Taiwan. So even that is causing some trouble as far as the economic outlook for Japan is concerned. China is the biggest source of foreign tourists for the Japanese economy. And yeah, we're gonna wait and see how that will translate into the fourth quarter figures. It is the holidays, so it should have been a high time for tourism, but this spat it's just a few days old, but
Mm.
Takaichi said she's not retracting her statement. So something very interesting to watch out for in the in the next few weeks, Peter.
Yeah, and there have been a lot of Chinese cancellations, travel
Oh
cancellations
yes.
already. It is quite amazing that we've seen it before.
Mm-hmm.
The Chinese people, they follow, in that sense, very much what the government encouraged them
Yes.
to do.
Yeah.
But some will say, yeah, but it's a communist party, and they just have a president that decides everything for the one
For
one
the rest.
1.35 billion people, and so no, that's not the case actually. Chinese people, they're very proud of the country, very proud of China, and we should not underestimate that, and we should understand what it means. So it actually means if somebody are seen as being rude to China, they simply don't go there. Also they boycott very fast
Mm-hmm.
whoever is sort of being negative to China in a way that as we've seen now from Japan. And that is not it is not a decision taken by a Chinese government or a president. That is, they're not banning people from traveling to China to Japan. They're just saying, okay, we don't want to support that, and people they follow that. And they because it's a pride that is hurt. Exactly as we have seen after Trump has been beating all kind of countries. Some countries and some people, in particular in Canada, they have. They have simply stopped traveling to US and don't purchase US products. And it's the same we observe in China. And China is big. It is we talk about huge volumes also in terms of tourists. So that is interesting. So people are simply it's very proud people. So they disobey this kind of comments from Japan for this in this case. So this will be interesting.
Yes.
If what happens, or if it just sort of smooths out, and then yeah, and nothing more happens. We don't know.
Actually, a Chinese official, I think, tweeted something to the tune of like "off with her head" for the Prime Minister of Japan, and
Yeah,
they deleted it. But of course, people already saw it. Of course, screenshots are available, and yeah, so it's really a big deal. And as far as Chinese businesses are concerned, the airlines actually offered to refund or rebook the flights to a different destination for free. So that's really the scope of that patriotism in China. It's really a
yeah,
different level, Peter.
it is. In many ways, it's interesting to see that development actually. Yeah, yeah, good.
Actually, Peter,
Yeah.
since we're on the topic of China already, another interesting facet of the economy right now is how popular Chinese stocks are becoming. Well, it's been popular to us for quite a long time, but not for the rest of the world. It's only very recently.
Yeah, it's a big turn. Earlier, there was sort of official numbers getting released.
Mm-hmm.
ongoingly, so we could follow investments into the domestic Chinese stock markets as well. They have sort of these north-south trading channels between basically China mainland and Hong Kong. That is the way into for foreign investors into China A stocks, and also showing Chinese investors investing into let's say China stocks listed in Hong Kong. Now these data are not available anymore, but different other data pieces and sort of tracking changes in Chinese portfolios as a Chinese stock portfolios among domestic investors and foreign investors shows what we know, that there is a extreme inflow into Chinese stocks this year, and it is a reversal from international investors that
Mm-hmm.
for 2 years ago saw China as uninvestable, and then now reverting back into the Chinese stock market, and we can feel as well because
Yes.
we can see a number of international investors, also pretty big as managers and sort of family-like offices. They look at our humble China fund that is still one of the best performing in the world. So we can see the interest is very different from compared just 9 months ago. But the data also shows that the inflow is enormous. But what is
Mm-hmm.
important is that one of the most biggest sources for investors and new capital into the Chinese stock market, that is actually from domestic retail investors. That's very interesting. These guys are typical also the investor types that makes the market volatile
Yes.
because they are moving more in and out.
Mm-hmm.
We should be aware of that. So if they sort of decide to pull out, it might cause a pretty steep correction. But anyway, we also see more comments from, let's say, big international asset managers who actually reckon that the Chinese stock market is still looks cheap compared to the rest of the world. And
Mm-hmm.
that is, of course, always interesting to discuss, and that's always interesting for investors. Are Chinese stocks still cheap? We would say yes, it's still a good opportunity. What has been particular focus, we all know it, it's AI companies, and they are sort of still trading at a lower price in China, Chinese AI companies, than if we compare to, in particular, US AI companies.
Yes.
So that is, of course, also attracting some investor attention. Though in this sort of very rosy story, we should not forget that there are also contractive factors we could take into account. The real estate market in China is still looking soft. And then we know globally, and that is a long-standing theme, there is an overcapacity of production capacity, as in particular as in industrial production capacity globally, and that is also outspoken in China. So is a pressure in that segment, also as a price pressure. So it's not everything in domestic China that is rosy. The private consumption, we would like to see
Mm-hmm.
stronger, simply, as to put it that way. So there, in wherever we look around in the world, at any country, there are things that could be a concern,
Yes.
and that includes China. But it doesn't change the fact that investors are increasingly looking into China, and still we consider many of the companies as still a good buy, as a worth to buy.
Actually, Peter, fresh data from the Chinese statistics agency show a softening in both retail sales and private investments, at least for January to October period. So, of course, that's kind of the manifestation of the ongoing concern about China's easing growth. Still very much robust compared to Western peers, for that's for sure. But
Mm,
as far as optimism, there has been some concern recently. Stocks were down for about a few days over the past couple of days as far as the Chinese markets are concerned. But year to
mm,
date, still very strong.
yeah,
MSCI China is up 31% year on year versus the Nasdaq up 19%. So that's really one of the signs that there is really stronger and stronger interest towards Chinese markets, Peter.
yeah. if we look into 2026, I think we're sort of starting to be allowed to look
Mhm.
forward.
Yeah,
Um, we still see the base scenario as positive when it comes to Chinese stocks. Will the market be more volatile in general in 2026? Probably yes, but we still see it's still the base case scenario is actually still okay.
that's still
So I think
encouraging, Peter. So a
certainly.
lot to work out for that. And still, let's stay in Asia, Peter. We're also looking at Indonesia's plan to
Okay.
implement an export tax on gold. So this is very reminiscent of what they did in 2014 when well, at the time, what they did was a complete ban on ore exports for nickel. So that
Mm,
is a very important element that they wanted to gatekeep. Anyway, they are the biggest producer, and they sit on the biggest amount of reserves for nickel in the world. So this time, since they're not as big in the gold arena, they're just trying to convince or nudge those who need it to process it domestically. So the range that they're exploring is about 7.5 to 15% per troy ounce of gold. The lower end would be for the processed gold, and then the higher end would be for the gold ores. So
mm,
it's really an interesting take because they've really been trying actively to capitalize on the rich mineral reserves that they have at home
mm,
to generate more revenues, something which countries like the Philippines can has not been doing for the longest time. Um,
mm,
and but The approach for gold is really different, mainly because they don't have the dominance in that market, but they
mm.
do want to generate more income from that. And as far as global gold prices are concerned, this could push prices up to a certain extent, but not really anything dramatic. So supply of gold is elsewhere. I think Indonesia is about top eight in terms of gold mining and production, and far, far
Mhm.
lower as far as total amount of gold reserves against other countries. So what they
Mhm.
can do there is really just to charge more for what's coming out of their country. Um, and it's of course supply can be sourced elsewhere, maybe some recalibration in that part. But as far as global prices of gold, it would still be mostly supply driven as far as and demand driven as well. Of course we know that gold is much more in demand because it's a reserve for many central banks. It's
Mm.
also for fashion and of course, and
Mhm.
also for electronics. So a lot of demand there. Indonesia could profit a bit more, but I don't think global prices will dramatically shoot up just because Indonesia plans to do this.
Even as you say, they are maybe number eight in the world, but they're too small a player
Mm-hmm.
in the gold market to move this significantly. But there's also another angle, and that's also why we raise the issue.
Mm-hmm.
As Indonesia as such, they are sort of scrambling a bit with the economy, yeah? As they are
Yeah.
really they're trying to deal with maybe a bit too many problems
Yes.
or too many issues
Putting
that
out
could,
too many
yeah,
fires.
yeah. There's not one of these issues that are so significant we get nervous, but the number of issues we are looking at, let's put it this way. And there's also, as a sort of a number of issues that are maybe raising a bit in concern,
Mm-hmm.
that's also increases the risk that one of them really could develop into a bit more sort of a nasty situation or critical situation. So we are looking a bit at Indonesia, and it's big as a surely in terms of population, yeah,
Mm-hmm.
it's a significant Southeast Asia country, but also as the size of the economy in absolute terms is also a certain size, yeah. So it's not quite unimportant what is going on in Indonesia for the whole Southeast Asia region, and basically what they're trying to do here is okay, but it's more the context we um, yeah, we keep an eye on, and it's not overly optimistic. We see what they're doing,
Yeah.
and we say, yeah, okay. Some of the other countries, as you own, the Philippines, are more attractive than Malaysia, and so it is absolutely more interesting to look at for investors. We would say, yeah, yeah. So the Indonesian story will continue a bit. Yeah, that's what we
That would
believe.
be next year. That's the plan. So look at it. I guess when you're dealing with a less popular government and you're in need of more tax collections, you try to look for things like this where not everyone at home is affected because it's gold. Not everyone will be buying or trading gold. But yeah, let's see if they're able to achieve that goal, Peter.
We will see. It will stay on our radar screen, and it has a bit sort of upgraded position actually, and that is a bit, honestly, a bit concerned position. But let's see how it works. Good. Let's talk about some bubbles, and it
Yeah.
is unfortunately not champagne. It is some of the things that we actually fear as investors. It's bubbles in the financial markets. Yeah, it's something that we fear, particularly
Mhm.
when they do burst. It doesn't happen very often. But if they burst and explode, then we all know that it is typically followed by a steep fall. Yeah,
Yes.
and some out there would say yes, it's why they love falls because they are steeper and it's where you earn the most money if you see it right. So the
That's the
world is
problem. Catching
yeah,
it is the problem.
yeah. So but the good thing is the world is always full of opportunities. Yeah. But for sort of the investors looking at being long in the market in general, then the bubbles are of course more critical, and we take the theme up because bubbles are now sort of a bit talk of town when we are looking
Mhm.
into AI companies. We had some within the past 24 hours. We had some relief in that concern. The media came out with another fantastic result. Yeah, and
Yes.
that sort of is a sort of generating a whole relief feeling for the whole AI market or the whole AI companies. But it's yeah. Um, I would say a lot of AI companies out there, they will, as whatever happens in Nvidia, that's just matter for them, so to say, yeah. But of course, it matters for the pricing of the sector. But anyway, a bubble in AI is a theme, and it's then worth to touch. Just two comments on bubbles. The first explosion in the financial market I explored professionally, that was the meltdown in October 1987 when Wall Street collapsed. It is,
Mhm.
after all, a few years back, yeah. There have been truckloads of bubbles since then. Some of them are world famous because they simply were true bubbles, and the biggest, and I'll say most best bubble to describe and to study was the dot-com bubble in the 2000, 2001. That for sure was a bubble. Also was sort of a bit recognized with people, they didn't know what they were buying. At that time, if something has a COM behind the name, or in the name, or just in the email address, people bought it, regardless what was in the company, and it was crap or whatever. Yeah. So that is when people really rush into to an asset class, into a segment, whatever, that generates a bubble. And the whole problem was that the dot-com bubble as such took the whole global stock market higher. So it bought the whole market. It made the whole stock market hot, the
Mhm.
global stock market. So it was more than a dot-com bubble as such, but it was the thing that you could say we would like to say that was a thing that busted.
Uh-huh. Mhm.
But that is a study was, but it was actually an overpricing of the global stock market. Today, just to take and try to relate to the sort of the conversation about do we have an AI bubble?
Yes.
I would say yes, there's a bubble. But there are a lot of bubbles. A lot of bubbles occur all over the place. And the problem about talking about bubbles is that we cannot talk about the negative bubbles. Uh, that is, it's you could call an imploded bubble or whatever. A negative bubble is actually what we would call cheap or undervaluated. And now we just had a conversation about the Chinese stock market. Is it cheap on a relative basis? Yes, it look still cheaper compared to the rest of the world. And that is actually when we talk about, if we will talk about a global bubble, that will be contractive in the terms of how hot is a bubble, how big is a bubble. And now we're just talking about as a just, I know the AI sector has become bigger, expensive in terms of market cap because it's gone up.
Very
But it's still,
quickly.
yeah, but it is still just, how to say it, one segment. Could a segment explode? Yes, of course. A lot of things can happen. If the Chinese central bank would say overnight, hey, we bought too much gold, uh,
Mhm.
we reverse our gold purchase and we now become sellers. I can tell you, as a gold would really drop down like a stone, and we will see gold mining companies, they will drop. Yeah, but it wouldn't affect the whole market. And again, AI, if it sort of explodes, then we will more see it as a correction, as because it won't affect the whole market. It will affect tech companies. Yes, it will. It will take tech companies lower. Will the tech companies going lower take the rest of the market lower? Yes, it will. But that is a correction, and this is actually sort of bit. The life we see right now in financial markets, as we've talked about for, I would say, a month or 1.5 months here, advocating that people should adjust for a correction, adjust the portfolio, take out those who have gone up the most, reduce a bit there, all this stuff, but do not leave the market. And this is very actual how we see what happens now. That could be if AI should go lower, yes, but it will lead to max a correction in the rest of the market. And yeah, that is, but it can be an isolated smaller bubble
Mhm.
within a segment. That is not a live threat to any financial markets. So this is how we see it. But bubbles are fantastic, interesting, and we should learn from it. And now we have a bubble of a certain size because it's there, but just a correction. If things go down 10, 15%, that is not an explosion. It is just basically a correction, and the bubble in that sense also disappears a bit. A lot of the hot air disappears, or
Mhm.
the rest of the market could go up, and that again, this relative movements takes basically hot air out of an AI bubble or whatever bubble. We could also talk about the real estate sector in some countries. So bubbles are fantastic. They are real words to understand, but
Mhm.
very often they don't explode. They lose air, steam at some time, and that is actually also good to know. Uh, so this is how we see the AI bubble right now. This is sort of in the environment we recognize is there, but we do not see it as a threat to the whole market. But people invested into AI, yeah, also they will be fully aware of how the market is going. Yeah. So this was sort of a bit philosophic about and about things that is right now in the market, and they are fantastic to learn from, because they will come again. I promise that. That is for sure.
I think, Peter, a lot of the fear about the AI bubble is the fact that AI, I think, accounts now for 20-25% of at least the US indices.
Yeah.
But at the same time, as you said, of course, a decline in that 20-25% of that portfolio would hurt. But then again, you can look at the remaining 75% and maybe still draw some profits from there or good returns from there. So, yeah,
Exactly.
the fear may be overblown right now. There is a correction coming, but probably not at the extent that some of these observers are putting or are expecting.
But interesting, and I'm sure we will return to that subject as well at some time. So
Very, very hot topic.
yeah,
But
yeah.
Peter, yeah, we actually touched upon our outlook as far as the global stock markets are concerned. But of course, as we always describe it, we still see the sunshine as far as global assets are concerned. We are in particularly in favor of some segments more than others, some areas more than others, that being the emerging markets, particularly China and Southeast Asia. Um,
Mm.
and we are we still like risk, but of course we now recommend that what the risk we take are well considered, Peter.
Yeah, exactly. This is how we see the world. Still truckloads of opportunities. Still a good counterweight to some maybe overpriced areas. And again, yes, we see a correction, but it's the reason not to leave the market. The correction will not be big enough to profit from it, so to say. To get out on the right timing and to get in again, it's extremely difficult. And then it's better to take the adjust the portfolio. Should there be a bit stormy weather, yes, it'll be there. It can also be we're wrong in our forecast, and the market continues, the financial market continues higher, and then not a lot has happened by adjusting. So this is yeah. So we are pretty happy still. Yeah, I think that's it basically.
Thank you, Peter, and thank you to our audience. Thanks for tuning in. We'll be on the lookout for market developments worth watching. Catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify. For expert insights on the go, download the Lundin's Investor Insights app for free. Risk loving investors will find opportunities in our high quality alternative investment funds, especially our multi awarded Mutual China Fund. For more, visit lundinscapital.com.